Welcome to XM.com for this Forex Preview video. I'm Cristina Marujos, and joining me today is Cristina Bartheni, the investment analyst. We'll be having a closer look at the Bank of England meeting coming up on Thursday and, of course, the outlook for the pound. Cristina, recently the Bank of England chief Andrew Bailey said that policymakers are evenly split on whether or not the UK economy has achieved the right conditions for monetary tightening. Given the latest economic data we have had from the United Kingdom, what do you think policymakers will signal at tomorrow's meeting?
Hi, Christina. That's right. It seems that the Bank of England is confused about whether the current economic recovery in the UK is sufficient enough to start reducing stimulus, although inflation has surpassed the bank's expectations for the past 2 consecutive months. Of course, the central bank has upgraded its GDP growth and inflation forecast last month, estimating inflation to reach 4% year-on-year by the end of 2021, which is well above its 2% target. But it's definitely a very challenging period to tighten policy with confidence. Perhaps the recent upbeat CPI inflation and employment data and the significant increase in gas prices could see some policymakers switching to the hawkish side and joining the board member Michael Sanders, who recently called for the asset purchase program to end sooner than scheduled. Winter is coming, so demand for oil and energy products will be high, and given the serious supply constraints, consumer prices could further strengthen. So theoretically, cutting bond purchases, which have been supporting the economy since the start of the pandemic, could be the right choice to make to ease inflation. But in reality, unless wage growth rises and consumers have enough savings, this could have a negative impact on consumption and investment, since there's no clue about how the pandemic will evolve during the winter season. On the other hand, if the bank leaves policy unchanged, letting inflation get out of control, it will probably need to take more drastic tightening measures in the futures, like raising interest rates more rapidly, which could be devastating for consumers, especially if that happens at a time when inflation would have already eaten consumers' pockets. So overall expectations are for the central bank to send some hawkish signals. The new chief economist, who will have his first voting day this week, is a hawk, so he may contribute to that, but perhaps with some caution. Likely the bank will let its asset purchase program expire this December instead of cutting its bond purchases earlier than that, and it could also avoid any serious commitments about rate hikes, which are priced for the second half of 2022.
Now let's have a look at the pound. It has been on the back foot the past 3 weeks because of dollar strength. How do you think it will move after the Bank of England meeting?
That may depend on whether the central bank will sound more hawkish than investors anticipate. If it decides to stop its asset purchase program as scheduled this December, but keeps the option to resumption open, also appearing more reluctant about whether the first rate hike could happen in the second half of 2022, then the pound could come under selling pressure, because that would be less hawkish than investors have priced in. Otherwise, if the bank takes deflation more seriously and decides to terminate its asset purchase program before the expiration day, then that could push the pound higher, and in this case it will be interesting to see if pound dollar can finally break resistance between 1.3840 and 1.3912.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.